Hello, traders. It's 8:01 a.m. Chicago time on the 6th of March, 2018. It's a Tuesday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market stance is towards risk allocation. Yesterday, it didn't look didn't look that way, the way we opened, and then the market basically took a turn an hour in and pretty much ripped up close to, I think, 40 points or something, straight up. So that was as much of a surprise to me as it is to anyone who didn't foresee that. But this morning, we're opening a little bit higher than where we closed on the indices. The laggards this morning, U.S. dollar trading at 89.50, 53.5. The Bund and the 10-year are also lower. Everything else is strong, including gold. Gold leading the pack up 1%, 1.02% at $13.40, trading at $1,333.40. Followed by the DAX and the Euro stocks. So pretty tough read, in my opinion, as to what the overall global macro view is. But we're holding on to those higher prices from yesterday. Overnight, we didn't explore much to the downside. Expected 27.15 to 27.13, at least 27.15 being the MC point of control in the S&P. We'll go over that in a minute. On deck today, seeing durable goods and factory orders, both numbers at 10 o'clock, so pay attention to that 10 Eastern. Here's what we expected yesterday versus what we got. Yesterday's expectation was for the market to, given the move from the prior days I drew yesterday, push down, pull back to about mid of the impulse day move. The expectation is for an attempt at the low, higher low, and then the market starts pushing higher again. That did not happen at all. We did get the sideways movement. But we didn't get the pullback at all. So this was completely wrong. Yesterday, to be frank with you, I didn't do anything. I just pretty much tried to stay awake and watch the market rip up. The alternative, the second alternative plan is for it to test higher, move lower, and then get an impulse up and then start to drift up. But I didn't expect this to break as high as we did. I'm not even sure if it was on news or what. Maybe something to do with the tariffs. I'm not sure. So that was what was expected yesterday. Overall, this is what we accomplished. Let me switch the scale. Kill these. We consolidated right against the point of control, the prior day's point of control, the key price at 26.74. We stopped at 74.50, and then we broke out of this triple distribution profile all the way back up to the prior day's point of control, where we paused for a minute right there, and then we continued to drift up into the close. We didn't quite get to 27.31, which is the next expected area. And so we shift the point of control higher. We have basically a trend day profile type based simply on the multiple times that the IB projected upwards has been crossed. So we have probably 5 or 6 times the IB projected up, and no real downward rotation. So I'm treating this as a trend day up. If it's a trend day up, this means that the market could not find consensus on price, which means that value is invalid, even though the program still calculates it. So that's yesterday. The overnight session. The overnight session fairly steady, very quiet through the Asian Open, and then a little bit of turbulence here at the European Open, and it's just continued to drift up, put in a high of 27.3450. Very bulky overnight profile. Not much to glean from it other than the fact that it traded a lot above yesterday's high, which is a short-term triple top, basically. So we had a weak high into the close. We shifted the point of control to the high. The expectation is we're likely to take that high out in the overnight session, which is what we did. Volume, by the way, is pretty strong. Is relatively strong, greater than the 125, 130,000 we would expect. And volatility is dropping. If you look at the VIX, traded down below Friday's low, which was 1936, is trading at closed at 1808 yesterday. So that's the review portion. Let's look at what we're expecting today. Tough read, but overall, we're still inside of some pretty fat areas. Let's shift this forward. All right. So the point of control is still 27.15. I'm going to get rid of this profile back here. All right. And so this is what things have looked like since the drop of the 5th of February. We are basically trading right inside of this heavy area. We've pushed through a couple times. We've tested through. We've fallen back, and we are trading somewhere in between. Okay, and so this morning the expectation is that we are likely to get tangled up. We have a fair amount of resistance above and support below. The areas that I'm looking for a test on right in here. And then any drop, again, just what I outlined yesterday, right in here. And we are right there. So the overall expectation this morning, open auction, I'm going to put on my stock zones here so I have some guided areas. There we go. The first sigma is 2750 or so up and 2688 down. So open, looks like we're opening out of range. Open auction, the expectation is for a mild test into that weak high, looking for an impulse up and then push to 2740 and then ultimately get to 2750 is a key above today. So I'm expecting this to be strong resistance today. A test at 2750, if it gets there, is likely I'm going to look to sell that on the first test. So that's the first scenario, is continuing with the trend. The overnight session shows us that prices are being accepted higher, and it's likely to continue higher. Okay. News comes out about this tariff nonsense, and it starts to sell off. Then the expectation is for an open auction, tests higher, falls through whenever that news comes out or whenever that event takes place. First test I'm looking for 2717, bounce around, consolidate in the point of control, and if it lets go, 2710 is really important here. And then we continue to drift lower towards 2706. I don't expect it to push through 2700 again. That's the second scenario. The third scenario is it trades both sides, right? So it ends up pushing down through and then consolidates, gets to 27.40. So our range becomes 27.15 to 27.40. That's the third scenario. I want to remind everyone while we're at it that Thursday is rollover for all U.S. indices. Thursday morning at 9:30 Eastern, 8:30 Central is the official time that we're supposed to trade June 2018. Starting Thursday, my data rolls to the June contract and is backwards adjusted, and I will be quoting and trading the June contract. The contract symbol is ESM8 for the ES, NQM8 for the NQ, and so on. So just remember, Thursday's rollover, and then from the time rollover begins until expiration the following Friday, your volumes are going to reflect, rather than fresh demand, they're going to reflect the roll, which means people who are short are going to get long the current month and short the next month to roll their position. So you're going to see volumes increasing, and the delta is likely to be way off. So just remember that going into rollover. This happens 4 times a year. I'll leave you with those thoughts. Good luck today, and I'll catch you tomorrow. Take care.